So here is an update on Bitcoin, a midday update. I wanted to take this chance to share some additional viewpoints that I have. I believe a potential direction could be in the form of a wedge. And this wedge is usually very bullish. And one can label this as an A, B, C, D, and E. The head and shoulders, this is Ether, but Bitcoin is very similar. The head and shoulders and the ascending right triangle that we're seeing right now, that I had presented early in the morning and yesterday, can bring us the impetus needed in price to bring the price to D, which is at around 13,568. And from there, price will return for one more lower low. This is my primary count for now. However, there is a chance that price can climb and exceed basically say that the bottom is in here. And that price pathway scenario can be explained by the continued all-time lows of the MACD. It went as high as 2,491. In the history of what I view, it hasn't fell to this level before since the genesis of Bitcoin, at least from my vantage point of view. So we are currently at 762. The red histogram is showing a divergence. And the way the MACD works is because the reason also why I prefer the MACD is because the red histogram is a 9-day moving average. The blue blue line is a 12-day moving average, and the red line is a 26-day moving average. And this moving average means that the histogram will turn first because it's only 9 days. So it'll move and turn more quickly than the blue line. However, the blue line is 12 days, therefore it'll move and turn more quickly than the red line. So we already see a lower low divergence. Now then, the histogram will continue generating maybe higher lows. Something like this, and therefore it'll start rising ahead of the blue line. Then the blue line will turn next because the blue line is only 12 days. And that blue line will turn. And because the red line is 26 days, it'll move the slowest. And as it's turning, the blue line will then cross. The two lines will converge, cross, and then diverge. That is why they call it moving averages, 9, 12, and 26 days. CD stands for convergence. Whenever they are about to cross, they converge, and after the cross, they diverge. This is a buy indication. This would be the buy signal to expect. Now it could happen here. It could go another 1,000. But I think it's very oversold. And there's already a divergence of higher lows on the histogram, which is signaling an impending turn of the blue line of the MACD, and then the red and blue will converge and cross. Now back to here. If price comes to the line and gets repelled, E is going to happen. And that E landing zone coincides pretty well with that zone of support. And the fact that this is a descending wedge is very bullish. Another way of labeling this will be a double zigzag. W, X, and Y. And this double zigzag means, if you recall from my tutorials, you can have an A, B, C, 5-3-5 zigzag. Yep. Two zigzags. So we already know this was 5-3-5. A, B, C to D, and then we can have another 5-3-5, another zigzag. And this will be labeled with W, X, Y. And this whole thing can be translated into application yield. Another interesting pattern to be aware of could be, instead of a zigzag here, we might get an A, B, C, D, and E. where you get the triangle combo. And if you translate that here, so you have ABC, zigzag, ABC, that could be another combination. So like I said, there are 36 possibilities. And I frankly don't care which one it is. I do know this. That is what I know. This correction too shall pass. If you don't have any cash right now, this bounce could be an opportunity for you to maybe go farming for cash in your portfolio. And that'll enable you to buy the dips. I'm not telling you to do that. I'm not recommending you to do that. I'm only saying that is a consideration for you to have. But my primary account is still A, B, C, D, E. This here is still my primary account. And I'll let you see if this turns. This is like a rubber band. You can stretch the rubber band, stretch, stretch, stretch. You can go to 1,000, you go to 1,200. But there will be a snapping point. And at that snapping point, there will be no more sellers left. All the sellers will have sold everything they had. Not a single seller to be found until you have nothing but buyers left. And that's when price explodes. A, B, C, D, E. Stretch the MACD rubber band. And we should get a buy signal to expect. So I wanted to give you those viewpoints as well to give you a bigger picture now. So from the genesis of Bitcoin back in 2009, here's the big picture that I see. We did a wave one of around 20,000. This is a very clear ABC correction. What comes after wave two? Wave three. This is when I was calling for the $30,000, $70,000. And I still have not changed my targets to those. Just because we have a lousy correction. People are cussing my name and spitting on my image. I don't give a shit. I am trying to be as deadly consistent as possible. My methods do not change because of what someone else says. And I call it as I see it. This is what I see as a big picture. This is how I came up with my $70,000 target. 1, 2. This is the forest. 3, 4, 5. And if you cannot take the pain of this correction because you don't have any cash, you didn't take any profits, now you know. Cash raising is during the uptrend, during the good times. That is when you generate your cash for your portfolio to be 10, 15% of your portfolio to be cash. So you'll be ready to buy these dips and become in a better position. This is not a guarantee, by the way. Any of you who take this as a guarantee, and let's say it doesn't happen, stop blaming me, you got something wrong with you. You have to do your own due diligence. If you fall blindly, I offer no apologies. I have been deadly consistent in saying that my method is nothing more than identifying as many possibilities, generating a handful of probabilities, and selecting my primary and alternate pathways. And I'm going to remain consistent to my bigger view. I hope this was helpful. If you have any questions, please post. For those of you who think you can get more out of this, who would like to embark in the journey of technical analysis, I'm more than happy to help. Please give me a contact, and maybe I can provide some additional support and didactic ways to accelerate and truncate your learning curve. Because this is not an easy technique to learn, but it is a skill that can be learned. Okay, thank you for listening, and I will continue to do my utmost to bring as much informative analysis that can augment your due diligence. I am not here to tell you when to buy, when to sell. No. And I've been very clear about this at the very beginning of my blogs. I am here to augment your due diligence. Period. And that there should be no confusion in that. Perfect. Have a great day.